When it comes to Bitcoin, the price has been surging. It's at 65,000 right now. And a lot of people said it would never get there again when it got all the way down to 18. But now with the Bitcoin ETFs, the question becomes how much of your portfolio should you allocate to the Bitcoin ETFs or in Bitcoin in general? So in today's video, we're going to be looking at just that. And there's some crazy stuff out there that I've read from a couple different places. And of course, with Catherine Wood, she said the magical number that you should be investing is 19.4%, which is kind of crazy because ARK Investments have said previously about a 0.5 to a 6% range. Now, majority of people are saying if you're in that kind of 1 to 5% range, that is kind of the sweet spot. But if we put 19% of our portfolio into Bitcoin, they are saying that is being ultra aggressive. Now, there's a couple reasons behind there that we're going to break down in this video. Now, of course, with the Bitcoin ETFs, there are a ton of them out there. You have to make sure you have to look and see exactly what the fees for some of those are, how they're performing, how they're being managed. But one thing to remember is where's the Bitcoin actually being allocated or where it is being stored. So a lot of the Bitcoin ETFs are using Coinbase. Coinbase is actually holding the Bitcoin and they're issuing those ETFs off of what Coinbase is holding. Now, a lot of people are concerned that if something should happen to Coinbase, let's say they get hacked, something malicious happens, a lot of the Bitcoin that are in these portfolios could be gone based on just kind of how cryptocurrency works. And if you're not familiar, absolutely do your research. Now, according to Kathy Wood in ARK Investments, Bitcoin optimal Bitcoin profile allocation should be closer to 19.4%. And for me personally, I am not anywhere near comfortable owning 20% of my portfolio, where if you have, $1 million, you're putting $200,000 into Bitcoin. For some people, that might be a drop in the bucket. For me, that is just super ultra risky. Now, of course, ARK Investment published the big ideas of 2024, which said, how did they arrive at this figure of the 19.4% in Bitcoin? And it is about thinking as Bitcoin as a standalone asset with a very unique risk profile. Now, of course, we know some countries are accepting Bitcoin worldwide, which is kind of crazy to think. And it seems that Bitcoin has outperformed every major asset class over a long time horizon. When you look at the average annualized return of Bitcoin, so if you bought Bitcoin, you held it, the average annualized return is 44%, which when we start looking at, our ETFs like we normally do, you're talking 10, 15, 20, 22%, 26, even with some of the tech ETFs that were doing incredibly well. Bitcoin is sitting at 44%. And then the annualized return across all traditional asset classes is about 5.5%, which again is kind of crazy. And if you really segment out any 5-year timeline, it seems that Bitcoin will outperform pretty much any other asset class, period, even mapping it at a 5-year term. Now, the other thing of Bitcoin that they really break into this article from the Money Fool is the Bitcoin's correlation with traditional assets is super low. So even though people are treating it as a traditional asset, the actual correlation between it is incredibly low. And according to ARK Investment, the correlation coefficient is about a 0.27, meaning that most of the coefficients are about a 0.4, meaning Bitcoin doesn't really appear to have any other assets that on the market is really compared to. Now, of course, when it comes to Bitcoin, the portfolio optimization model, if people put this in there, so again, if people are allocating this 19.4% into Bitcoin, the money that is flowing into Bitcoin, they're estimated that it would push the price of Bitcoin to around $2 million per Bitcoin, which would be kind of crazy to think if it did go that high. Now, of course, this is kind of interesting because the previous allocation, they were saying 6.2%. And then even earlier in the year, they were saying 4.8%. So it seems like they've kind of severely misallocated or miscalculated. I mean, to go from 4.8 to 19.4 just based on Bitcoin ETFs. Not sure where exactly the swing is or why the change was, which was kind of crazy. Now, of course, in 2023, Ask ARK Investment, they were saying that optimal allocation to stocks was only 30%. So it was a very small optimization actually going in stocks. Now we know Catherine Wood, of course, kind of got a lot of fame with the superstar blockbuster that Tesla actually used to be. I don't know about the Magnificent Seven anymore, if Tesla is kind of still considered in there, I guess. I think they were 11th or 12th in the S&P 500. So their actual value has fallen quite a bit, and they've actually dropped out of the top 7, even the top 10 at this point. So looking at a period from 2011 to 2021, so we're looking at a 10-year period, Bitcoin was the top performing asset in the world. That is right. Nothing else was even close. At that, same can be true in 2023, which again, where Bitcoin was up more than 150%, far performing, outperforming every traditional asset class there was, and no one can argue with the past performance. Now, take that with a grain of salt because, of course, yes, you can't argue with the past performance because it is there, the track record is there, but that doesn't guarantee that anything is going to come forward and what is going to happen in the next 10 years when it comes to Bitcoin itself. So then the question lies, is Bitcoin going to be going to $2 million? That is really the target, or what they were thinking, that if you get to that 19% allocation of portfolios going into Bitcoin, and of course, with I believe 12 companies now have Bitcoin ETFs. So if you take money from traditional portfolios and put 19% of that into Bitcoin, the price tag would be well over $2 million for that Bitcoin per Bitcoin. But a lot of people are also saying that if you're running Bitcoin, and again, I'm not super familiar with this part of it, but if you're trading Bitcoin, when Bitcoin gets to a certain point, that people aren't going to have the ability to trade it. And I know that was something that I read in a previous article, that a lot of people were very worried about the enormous buy pressure that would go on Bitcoin with his ETFs to really push Bitcoin to a stratospheric level, but making it almost unattainable or almost untradeable for regular investors, because most of the Bitcoin that we know is kind of bought and held in a portfolio, which I know there's a lot of people that don't agree with Bitcoin, that don't like how it is. When you look at Dave Ramsey, when you look at Warren Buffett, Charlie Munger before he passed, that no one should have Bitcoin. It shouldn't be an investment tool. It's something that, smart investors have really talked about, that Bitcoin has no place. But before you rush out and you put your 19% into that Bitcoin, you have to know the risk and you have to know your risk levels. Now, of course, this is kind of crazy again, to go from that, 0.5% where you might just be touching Bitcoin a little bit to, up to 5%, which they consider 5% ultra aggressive. To come out and say a 19% Bitcoin allocation is going to be kind of the benchmark, I think, in my opinion, is very far-fetched. I think a lot of people still don't understand Bitcoin. Of course, there's a segment that does, trades Bitcoin, whatever, and they do incredibly well. But for a majority of people who have invested in cryptocurrency, they have lost a ton of money. And I know a lot of them personally, especially through social media, even on X, formerly known as Twitter. I think that's how you got to say it. But a lot of people have kind of went both ways, either for Bitcoin, for Ethereum, altcoins, whatever it may be. But let me know in the comments what you guys think about the 19% going into Bitcoin, and how crazy exactly would it be if it did get to that 19% of allocation with these stock portfolios. And I'll catch you in the next video.